Hello, everyone. Welcome to another episode with me, Kavita Agrawal, your SEBI registered research analyst. Today, we will discuss about 6 steps which you need to take to do good financial goal setting. But when you set financial goals, the stock market is always going to be a very important part of that journey. Before we jump into the topic of financial goal setting, I want to start with a small introduction to where does investing in the stock market begin. The stock market investing actually begins in our minds first. Since you're committing your money and you can see the changes in the money in real time in the stock market, that naturally tends to play a trick on your mind. And what tricks it plays and how to overcome those tricks, that is something which takes years to master via trial and error process. But the important thing to take away is that when you decide to start investing, you have to first truly make up your mind to do it with commitment. But stock investing is a journey, right? It's not a destination. So, like in any journey, it will not be a straight road. There are going to be ups and downs, and you are bound to get lost a few times. Every good trader has had multiple accounts of blowing up their trading capital. It's quite normal. So, there will be trips and falls and obstacles. You will incur loss, you will incur pain, but the main thing is to always keep learning from your mistakes and learn how to navigate those turns, to hop over the obstacles. You will learn the skills while living your life and working at your job. And now, since the stock market journey is difficult and there is no roadmap to this journey of investing, you need good and solid guidance. So you need a mentor, or you need a professional research analyst dedicated to your success. So, how do you begin the stock market journey or your financial goal setting journey? So, the first thing in this journey is going to be risk. How well do you manage your risk? And what do I mean by risk? What does market risk mean? And what does it mean for you in your individual capacity? You have to understand the concept of risk appetite in this. So, how much risk is too much risk for you? Risk needs to be taken into consideration against the return profile. High risk is equals to high reward. Most of the time, if you are seeking high reward, you need high risk. So, yahan pe the first step that you need to do is determine how much risk are you willing to take. Because, for example, cryptocurrencies have become very popular lately, right? But are you willing to take that kind of risk? I mean, for an instrument to be giving 25, 30, 40% move in a single day on either up or downside, which on most days is downside, is that something that you're willing to take? Is the first question. And then again, there are extremely low risk investment avenues as well, like FDs. The problem with the stock market is that if you're taking a lot of risk, the rewards are definitely huge, but then there is a huge risk of complete capital drawdown. मतलब अगर आप careful नहीं हैं, अगर आप बहुत leverage के साथ खेल रहे हैं, अगर आप बिना किसी plan के आगे बढ़ते हैं, तो 100% risk जा सकते हैं. The problem now, the second thing that you need to come to a decision at is, what are your goals? You can have your short-term goals, you can have long-term goals. You can have, say for example, vacation. You can have a goal of going to a small vacation with your family sometime this year, or you can have a goal of going for a big international vacation with alone or with your family in the next 5 years, for which you want to grow your income, right? It can be marriage goals, it can be education goals, it can be financial freedom goals, gifting others. Your retirement can be a goal. You want a new car. It is not necessary to limit your goals, but it is very important to have very realistic goals. Because when you set up unrealistic goals, you want a car, okay, which car? You want some very exotic German car, it becomes unrealistic for you. That kind of goal, you have to consider your goals against your current financial status, and why that is important will come to us in the next slide. Basis the goals that you have set for yourself and knowing what your current income is today, it will help you to identify the bridge that you need to cover in order to get to these goals, in order to fulfill these. Now, these goals will not get fulfilled all at once naturally. They will all be fulfilled one at a time. So, what is very important is to know in rupee terms or dollar terms how much money you're making right now, what is your total net worth, and where you want to be in, say, 5 months' time, or 5 years' time, or 15 years' time, or 25 years' time. Set these milestones. Now, when you've set these milestones, you get a clearer picture of uh, how much gap you need to cover. And once you know how much gap you need to cover, you can move on to the next step. But before you have very quantitative, before you have quantified the gap that you need to fulfill, you will not be able to move to the next step. Financial goal setting is not a very complicated process. It is a very tedious process. There are limited steps. Maximum amount of clarity and help comes in when you associate yourself with a professional to make sure that your assumptions of risk and your choice of asset classes suit your singular personality, because every person has very individualistic personalities. The whole journey of financial goal setting, of identifying assets and investment time horizons, they all vary. And because there are so many moving parts, doing this exercise successfully for an average person is pretty close to impossible, because there is a lot distracting us. The next step is to get an assessment of the asset classes that are available, which can help you potentially achieve these goals. Now, this is where the use of a professional truly comes in. For an average Joe, it is very difficult to actually assess the current market situation, take into consideration the different investment types, the different timings, the allocation percentage. But when you associate with a professional person, when a professional who's experienced in doing this, they can help you out with what are the nitty-gritties of each asset classes, and given your lifestyle, given your personality, given your investment interests, which assets suit you better. Like I was giving you the example of cryptocurrencies a while back. So there are clients, even for me, to whom I have recommended cryptocurrencies. But then on the other side, there are also clients who have higher net worths, who can definitely afford to invest in cryptocurrency. But because their goals are such and inflexible in terms of, they cannot take a risk with not achieving those goals, because, they have very they have goals which, if not achieved, can compromise the quality of life. And I, as a professional, because I understand that, I have recommended those clients of mine to not opt for investing in cryptocurrencies. Even if you might have the desire to invest, say, in a very risky asset class, staying in that belief that you can afford it, if when you have a professional in the picture, they will be able to help you and educate you better into the right mindset. So you need to know, as a fourth step, what are the asset classes that can help you out in achieving or fulfilling the gap. Then we again come back to the risk profile to understand these asset classes. ये जो asset classes है जिनमें आप invest कर सकते हैं, इन asset classes का risk profile क्या है, as in how much risk do they subject you to. And once that is done, which is a very quick exercise, you basically join you come around a full circle. And now you have to see, or your professional assesses for you, whether the asset risk profile matches your risk appetite or not. This actually is a very important step. And as you might have guessed, the whole procedure of deciding your financial goals is an iterative process, which means you do it once, you do it again, you do it again, and you do it again. So the first time that you do it, it's going to be a big exercise. It will hurt your mind because you are having to think about things that you've never thought about. You will have to be very systematic, and you will have to take it one step at a time. It is not possible for a person to do 3 days of intense thinking, putting in 48 hours over 3-day period and come up with financial goals. It's better to take those 48 hours, break them into smaller chunks, spread them over 3 months, so that you get time to think about stuff, research about stuff, sleep on it, wake up the next day, come to a better decision, and then start jotting in. The process, honestly, is very simple. It's not easy. Start with an Excel sheet. Start jotting these points down. You might have noticed that so far I have only given you 5 steps to setting financial goals, but I promised you six. So, where is the sixth one? Right? This is the sixth one. In order to be successful in the whole process of financial goal setting, it's very important that you maintain discipline. A lot of information does not mean good information or usable information. You have to have a strong filtering system. When you commit to sitting with your financial goals Excel sheet for 1 hour every week, make sure you do that. In the initial 3 to 4 weeks, you might have to devote more than just 1 hour. You might have to go as high as 2 or 3 hours a week, but that is only because the first step is always the hardest to take. But when you stay disciplined, and even if the first 2 or 3 attempts make absolutely no sense to you, but when you stay put at it, you will start seeing clarity, not just about your financial goals, but about yourself as a person, which can make a lot of difference. So in your journey of setting the financial goals with these 6 step approaches, where you start with assessing how much risk is too much risk for you, moving on to setting your financial goals, and then moving forward with uh, identifying how much gap you need to fulfill, then go towards looking at the asset classes which are available to you, and then assessing the risk profile of those asset classes, and then finally seeing whether the risk profile of the classes match your own risk appetite or not. And then depending on that, you adjust your risk appetite again. Based on the adjusted risk appetite, you go back and review your financial goals after 3 months, that okay, which goals can now be removed, or which goals now need to be added because of changed life circumstances. And even this was all about setting 6 steps to setting your financial goals. I'm Kavita Agrawal, and I'm the founder of EXP-Invest, which is a stock market services company. This was all we had on the 6 steps to financial goal setting. I hope you found this session useful. I come live on ET Stream 3 times a week. One is on Mondays with something special for retail traders as a knowledge sharing. Then once on Wednesdays with a Let's Get Technical series where I share analysis of 1 to 3 stocks which are showing good potential. Those are on Wednesdays. And then Fridays, I bring to you the Market Outlook series in which I discuss the whole week's outlook of the stock market, Nifty's price actions, and what is expected from Nifty and the stock market in the coming week. So thank you so much for joining in. I will see you again tomorrow. जाने से पहले लाइक जरूर करिएगा एंड फॉलो फॉर मोर.